The Cape Retirement Fund is a defined contribution fund. As a member of the fund, you will have your own member share account that will function similar to a savings account at a bank. Seeing that you have your own accounts, no cross-subsidizing takes place and you are responsible for saving towards your own retirement. Let us look at an illustration explaining just how we will be allocating your contributions and also how your retirement benefit will grow towards retirement. You will be contributing 9% of your salary every month towards your retirement. An advantage of working for local government is that your employer will contribute 18% towards your retirement. This means that for every R1 you contribute, your employer will be contributing R2. By investing your money together with all the other members in the fund, the group collectively earns investment returns and this is added to your member share account on a monthly basis. The interest you receive depends on the fund's investment returns. In times of positive investment markets, you will experience rapid growth, but during volatile and negative markets, you might experience lower or even negative growth. On receiving your contributions from your employer, the fund deducts costs. These costs are illustrated as a percentage of your salary and are determined in the same way as your contributions. First of all, there are the administration costs, also referred to as the running costs of the fund. These costs are used by the fund for administering the fund and to communicate with members. Additional costs are deducted for risk benefits, which include death, funeral and disability cover in the fund. Please refer to your official Cape Retirement Fund benefit booklet to see a breakdown of the different costs. After the costs are deducted, the balance of your contributions is paid into your member share account to save towards your retirement each month. When you leave your employer, you will always be entitled to the total value in your member share account. Remember, this account consists out of your contributions, the employer's contributions, less the running costs, plus the interest you earned over the years. In some funds, when you resign, or in the case of dismissal, you only receive your contributions and a portion of your employer's contributions. The rules of the fund allow you to retire at any age between 50 and 70 years old, depending on your service conditions between you and your employer. At retirement, your member share will become available to you. Seeing that the Cape Retirement Fund is recognized as a provident fund, you will be able to take your total member share as a lump sum, or you can take a portion and use the rest to provide you with a monthly pension for the rest of your life. You only have to make this decision at retirement. The trustees of the Cape Retirement Fund allow an indexing strategy when it comes to the allocation of investment returns. This simply means that the outcome of the fund's investment returns will have a direct impact on your member share on a monthly basis. All investment returns are allocated to your member share each month, and you will be able to see the impact of investment returns on your fund value when you request your values. No reserves are kept, so you can always be assured that all the interest due to you will be in your account. In times of volatile markets, you can also experience negative growth in your account. It is possible that your member share can decrease, and in the recent years, analysts have likened the markets to a roller coaster ride. The advantage of following an indexing strategy is the fact that there is no possibility of hidden reserves. It is the most transparent way to ensure that new members with large transfer amounts don't unfairly share in reserves accumulated by existing members. For more information on the fund's returns, please visit the website on www.caperf.co.za. Now that you understand the working of the fund, you know that at resignation, dismissal and retirement, you will receive your member share account from the fund. These are unfortunately not the only occasions when the relationship with your employer could come to an end. Death and disability could also occur. The Cape Retirement Fund provides death and disability cover, also known as risk benefits, to you. These benefits are offered by the fund to ensure that your family and dependents are taken care of in the case of death, or that you have a sufficient benefit to replace your income in the case of you becoming disabled. The Pension Funds Act provides that members are allowed to loan against their pension money for the sole purpose of using the loan to purchase a house or piece of property and also making improvements and renovations to your existing property. The trustees of the fund decided to provide a retirement fund-backed home loan scheme. The fund will stand surety for up to 60% of your resignation benefit in the fund. The money will be borrowed from a bank and you will pay it back on a monthly basis. Should you exit from the fund and still owe the bank money, the balance of your loan will be deducted from your benefit. This is a great benefit, however, even if there is no money available in your member's share. If you are under administration or don't pass the affordability test or do not fit the lending criteria as set out in the National Credit Act, your loan may be declined. Please contact the fund's call center for further information.